potential. We have potential of a huge breakout and a potential of a few red ticks to come. A week packed with potential catalysts coming. Hold on tight. Quick recap of last week. We went through the moon. We opened to Tuesday through Friday. We closed super strong on the SPY. We closed at 608 thereabouts. We are having a bit of an issue here after hours. We're down 1% on the S&P. You can see it Sunday night. And we're down 1.7% on the Nasdaq, a little bit more. But all that does is takes us back to the beginning of last week. So you know how we have the forecast with these purple boxes? This drops us all inside firmly into the boxes. So in reality, we just had an extremely momentous week and we just gave it back. That is a proper way of breaking out. The only problem is that we have several weak spots in the chart below. So they might decide to turn this into something else. Therein lies the word of potential. Let's break it down. The first mess of potential comes from the earnings, specifically the mega caps. We have a lot of important earnings scattered. Like, for example, SoFi might inspire or hurt the small caps. Boeing would hurt the Dow and the industrials, the XLI. GM probably the same, the industrials. The Wednesday earnings are important. We have Tesla, Meta, Microsoft, IBM, to mention the big names. Visa, MasterCard are very important. We have that on Thursday. MasterCard first, then Visa. And then the big guy, Apple. He is still the big guy, a big guy. So is it potential up or down? Let's focus on the Nasdaq, which is what you're looking at here. You can see this is the Nasdaq live picture from the futures and how they're falling through all the support lines we had last week, including one marked important pivot zone. So the potential can be in either direction. It depends heavily, if not almost entirely, on the reaction to the expectations, not the reports. I can guarantee you the reports are going to be amazingly strong. It's how much have they imagined. So it's a lot of subjective. We also have potential coming from the Fed. And that's where the potential for the bears might come in. The Fed has been so far very friendly. But because of the action in the TLT, which gives us hints as to what the market wants the Fed to do, the bond market, we can say with relative confidence that they're not going to cut rates. Yields have crept up since they started cutting rates aggressively. So they're done with that for now. The Fed meets on Tuesday for 2 days. On Wednesday, they will come out and tell us their message. No one's expecting a rate cut, so that's not going to be the disappointment. It's how they say they're going to proceed from here. Maybe the bears will get help. So far, the Fed has been a friend. Maybe this is the flip to where they're no longer a friend. I'm not going to say they're an enemy because the president wants lower rates, so he will put pressure on Powell to do that. But Powell may say, I can't do it right now. So maybe, just maybe, the Fed is no longer a friend. Oh, and by the way, we have GDP, we have inflation reports through Friday, and I guess they will start talking once their muzzle is off. So how do we proceed? If I'm a bear, and I am bearish, I will go into the megatech earnings prepared. In other words, I will hold hedges. Very simple hedges would be just buying a few calls in something that I'm shorting long term. So if I'm short the Nasdaq 3 months out or 2 months out, why wouldn't I just buy a couple of calls to help me in the short term? If we don't rally, I wasted a couple of $100. Not the end of the world. Bulls, you're not off the hook either. You're too confident. The bullish thesis in this day and age is too lax. It's almost like they don't see the potential downside. I've been trading for decades, and I've seen so many drops that come out of nowhere as a surprise, and everybody's surprised. And everybody in hindsight said, oh, it was so obvious to see. They come out of nowhere. Problems come out of nowhere. So just respect the amount of downside that could happen. Just that. And just like the bears need to be hedged into going into the earnings, the bulls as well need to do something similar. Neither of these ideas are extreme. I don't want anybody to load up on protection either way. Hopefully, the week will come out boring. I doubt it, but hopefully it'll come out boring. Since I mentioned them, these are the small caps right here, right now, live. You can see how they gave up a lot of the profits, taking them back to Monday, Tuesday. By design, in this environment, I force myself to have slightly lower conviction than normal. I'm confident in my skills the way they are, but by design, I say, you know what? I'm going to just knock my conviction a notch down. This translates into smaller trades, fewer trades, less directional trades. I avoid selling naked puts when I can. I would replace that behavior with selling credit put spreads. I would avoid going all in. If I choose to go long Palantir, I wouldn't load up. I would take a small position to start. Same with Bitcoin. Same with dozens of great companies that are not too expensive yet.